What's up, guys? Welcome back to the channel. Thank you so much for joining me. I'm Richard Allen, and I talk about stocks on this channel. And just yesterday, I was thanking you guys for 700 subscribers, and now we're over 800 today, so thank you so much. I'm trying to get to 1,000 subscribers by the end of the week, and I know you guys can pull through for me. So if you like my videos at all, click that beautiful red subscribe button down below. Today, I want to talk about Afria, and I want to jump right into my computer here, and we're going to pull up the chart. The Afria stock ticker is APHA. Okay, let's jump right into TradingView. You can see that the general sentiment for Afria and pretty much every cannabis stock right now is generally bearish, okay? And I want to show you that, and that's why I drew this big line all the way down. This is a generally bearish trend right now. We've had some massive run-ups back at the end of 2018, or the beginning of 2018, end of 2017. We had some massive run-ups in the middle of 2018, big run-up again, but generally a bearish trend. Now, we're seeing some consolidation here. I am not only a social arb trader. If you don't know what that is, it's trying to trade based on just sentiment in the market and what's hot right now or what might be hot in the future. But I also try to trade a bit technically as well. So that's why we're pulling up the technical chart here for Afria, because I think it's important to see where we're at in the stock. So I put my money where my mouth is, and I bought some Afria stock yesterday. It is down a little bit. I bought, I don't know how many shares I bought, a couple $1,000s worth of shares at $5.58. But I believe that we're going to see a breakout, and we're soon going to be at about $10 per share. And I think that could happen in the next few weeks. I could be wrong, but that's what I'm going for with Afria. Afria, again, is a cannabis company similar to Aurora Cannabis. We talked about them on the channel. But one of you, Milo, I appreciate it, pointed out that Afria could be bigger than Aurora Cannabis someday. And hopefully it's a little less polarizing, because Aurora Cannabis had a lot of you guys a little bit pissed off, just to say the least. So I want to talk about Afria because I really think it's a really great opportunity for a lot of us to make some good money if you like cannabis stocks, if you like the potential of these stocks long term. So over the next couple years, this stock could be, this could be, right now it's a $5 and something stock. It's almost penny stock territory. I think it could be a $20, $30 stock relatively soon, like in the next year or two, depending on what happens with regulations next year. I'm in TradingView here, and there are some analysts that point out that there's a chance that we could see, like we've talked about with Aurora Cannabis, we could see some decriminalization with marijuana here in the United States. We already saw it, that Canada's recreational use, period. I'm going to play an interview here with the CEO of Afria, and he talks about how fast they're growing in Canada. And the market here for the U.S. is, it's projected to be worth over $100 billion relatively soon. So I want to talk about Afria real quick and how smart their team is, okay? Their CEO is Irwin Simon. He's a really smart guy. I love listening to him speak. Back in '93, he founded the Hain Celestial Group. The ticker symbol there is HAIN. The reason I say that is because this is a $3 billion company, okay? $3.27 billion company that he founded back in 1993. This is a company that does production and distribution of organic and natural products. They have a ton of different brands. Mr. Simon is very brand oriented. That's why I wanted to point this out to you. And he believes that brands will win out the fight in the cannabis industry in Canada specifically. And he also believes that that will be the case here in the US. So I wanted to point that out. He's great at building companies and brands. So I wanted to point that out. Also, on the board of directors is a guy named Walter Robb. This is the guy that used to be the CEO of Whole Foods. He was with Whole Foods for, let's go down, almost 26 years. and he was a board member, co-CEO, co-president. I mean, he moved up from when Whole Foods was Living Foods. Crazy, crazy. So he was a store team leader and then moved up from there to become the co-CEO of Whole Foods. Really, really smart guy too. So I was excited to see him on the board. Another person on the board of direction is Tom Looney. I had not heard of this person before, but listening to some of the talks he's given and some of the and knowing some of the places that he's been in terms of companies, really, really smart guy. Very brand oriented as well. The reason I bring him up is because he used to be the president of Diageo. You can see that right here. And they're the company that have brands here in the US and Canada like Smirnoff, Crown Royal, Bailey's, Johnny Walker, Captain Morgan, and Kettle One, just to name a few. So the reason I bring him up is because Afria, they are not in the beverage industry yet. They don't have beverages or edibles, and they're still doing really, really well in the Canadian market. They were actually up 23% or so last year. So I want to pull up this because I think Afria has made some really smart decisions in terms of acquisitions recently over the last couple years. They acquired a company called CC Pharma in Germany. They're a pharmacy distributor in Germany, and they acquired them for $72 million. Their business, CC Pharma, is down, and I'll show you this in the interview. They were down this past year, and that's why Afria had sort of lackluster numbers. But I want to show you this video, and he talks about CC Pharma in depth and talks about why he thinks there was issue there. And then with the other acquisition they made just this year, it just got finalized actually, is a U.S. company, Sweetwater Brewing Company. So that goes back to Tom Looney, and Afria not having beverages yet, and also Afria wanted to break into the U.S. market. Okay, now when they acquire a U.S. company, now they can do business here in the U.S. without having to go through a bunch of legal loopholes. So this was a really, really smart acquisition. This will bring over $60 million worth of revenue to their bottom line yearly, and the business is growing. You can see that they grow. They're growing by 7% per year, and that was just last year. But they're very profitable. That's really, really nice. So this will bring some profit to their bottom line for next year. And Sweetwater, they already have something called the 420 Fest. So it was a really, really smart acquisition. So I'm really excited for the future there with Afria. All right, guys. So here's the interview I was talking about with Afria's CEO. So I'm going to play this for you guys here. So there's a few things I want you to take away, and I'll kind of stop and do some commentary along the way. So let's go ahead and play it now, okay?
Thanks very much indeed, as ever, for joining us, Erwin, on a busy day for you. Walk us through the latest quarter. Now, there was a drop in sales from the previous quarter sequentially. Can you tell us why that was?
So, Andy, good morning, and thank you for having me on. And as I talked to David before, number one, we're a Canadian cannabis company. Our Canadian cannabis sales are up 23%. We made over $10 million EBITDA from our Canadian cannabis sales. Our overall sales were down because of our CC Pharma. And, if you look at our sales year over year, we're up 243% on cannabis sales year over year, which I think, as I said today.
Okay, did you guys hear that? They're up 243% in their cannabis sales year over year. That's huge, huge numbers from this company. So crazy numbers. Really, really exciting.
David, it's important to compare. Our overall sales were down in CC Pharma in Europe, in Germany, and that had to do with medications that were not delivered to 13,000 drugstores and borders being closed, and surgeries not being had, etc. So that's not where we make our money. CC Pharma for us is a distribution business that will ultimately distribute medical cannabis to those 13,000 drugstores.
Okay. So that's the biggest thing I wanted to point out with CC Pharma. Okay, they do not see CC Pharma as this huge moneymaker for them yet. Okay, once they start selling medical cannabis in the EU and Germany specifically, CC Pharma has access to 13,000 pharmacies in Germany. So this is a distribution hub for them. They're making some really, really smart acquisitions like we talked about earlier with Sweetwater and stuff. So just keep that in mind when you think about Afria long term. I want to play a little bit more of this interview because there's a little bit of frustration from the CEO, and I want to show you why.
But I think where investors are missing, and I'm surprised why our stock is down.
Forgot to apologize for this part. So this next part, for a few more seconds, there's must be like a truck backing up or something at the warehouse. So it's kind of annoying. I'm sorry.
What investors are missing is this here. Our cannabis business continues to grow in Canada, up 23%. We have 7 brands. We've introduced multiple new products. And with that, the illicit market for the first time, is the same size as the legal market. And my other thing is this year, we are making money. We are profitable. Got good cash flow. So with that, I'm not sure what investors, are missing.
So I can see their frustration. I can hear it. I can see it in his eyes. I can hear it in his voice. He's like, I'm not sure what investors are missing. I'm not going to miss out on this opportunity. I think this is a huge opportunity for this company to go crazy. So I wanted to show you this because the illicit market, the illegal market in Canada is worth $2.5 billion. $2.5 billion. So he's saying for the first time, the legal market is on par, okay, with the illegal market. The crazy thing about that is they still have $2.5 billion, right? Once they get more and more people on the boat and talk about the quality control and things like that legal cannabis brings, they can steal more of that market share from the illegal market. So that's an exciting thing for Afria in the long term, and getting into beverages and edibles and stuff like that. So I'm really, really excited for this company. Like I said, I bought in at $5.58 per share. It's at $5.40 right now, but I see a strong breakout potential right now for Afria and long term. Like I said, in the next few weeks, I think we could see a big run up. I think this is the start of the bullish sentiment for Afria in the short term, but also the long term. I think we could see a couple years of a bullish run for Afria where we reach all-time highs again of those like $20 per share. But I think it could get to $10 here. We're weeks away from that, I believe, maybe a couple months at the most. We'll see. Their next earnings are in January, so we'll see where we're at then. I know this is a little bit of a longer video, but I wanted to go in depth on Afria and wanted to talk to you about it because I'm really excited about this company. So thank you Milo for getting me excited about Afria and all the dialogue, guys. Again, thank you so much for all the subscribers lately. I really appreciate it. Like I said, it's humbling. And it's fun. I like the dialogue, whether it's good, bad, or otherwise, in the comments down below. So keep it coming, seriously. I'm gonna release another video today, a little bit shorter, just talking about the overall stock market. So stay tuned for that as well. Thank you so much for joining me. As always, if you didn't already do it, click that beautiful red subscribe button down below, and I'll see you in the next video. Thanks.